Good morning. If you get really anxious about financials and wild swings and numbers, you should turn this off now. I do want to show you something that happened this morning that is erased, at least so far today, a week of some awesome gains in uh, declining interest rates. Uh, the markets are smart though. The folks that do the trading and that affect us, they know what they're doing usually. Right now, I think they're in a little bit of a reactionary mode. Keep in mind, this is my opinion. Let me show you some charts. I'll make this easy. We'll flip from here. This is the big announcement this morning that has sent everybody, well, a lot of people in the bond market into a tizzy. I'm sure there's some people that had an idea this was coming out. The 272,000 jobs that were added or announced that were added in May well exceeded the estimate of 190,000. It's 65% above what were added in April. These things tend to have corrections, but even at a later date when they correct these numbers, there won't be that huge of a correction. This shows a strong economy despite employment going up just a little, unemployment going up just a little. Part of the unemployment going up has to do with more people entering the job market. The strongest markets where jobs were added were not in small businesses and large businesses. It was government, healthcare, and that sort of thing. This is um, the note here from CNBC showing that non-farm payrolls expanded by 272,000. The unemployment rate rose a bit. And this is where the job gains were concentrated. I mean, leisure and hospitality, that's pretty normal this time of year. Plus, for the most part, we've recovered from COVID, but there are still gains in travel. Look, this is good news too. Average hourly earnings were higher than expected. The thing is this good news for the economy is not that great for rates. Um, and this was the reaction that the bond market had this morning on the 10-year treasury. Keep in mind, these are the same, and typically the same type of investors risk wise that invest in your 30-year mortgage backed securities. This is one day, see where it jumped up when it opened. It was kind of flat. I think about 8:30, they were set to announce the numbers. Obviously, like in anything, there are a few people that find out before. So the yield went up. That means people were selling bonds. I'm not sure where they're putting it though, because if you look, the markets are not that great either. I think people are taking the money out and setting it aside to keep their powder dry to see what happens over the next day or two. There tend to be knee-jerk reactions in times like this. We'll go back. I'll show you what I meant by the week's gains being somewhat erased. This was looking great. I mean, I was so excited to start calling people this morning about refinances. It was still a good time to do some debt consolidation and things if it makes sense. But I mean, it was going to be a great time for people that just bought a house in the past few months to go ahead and refinance. Show you what the scopes out over the last 3 months. You can see this is while it is only 10% or so of the, well, maybe 13% of the actual chart, it's the top part, and this is what makes people go crazy because they don't see the bottom, you know, what is it? The bottom 4% here on the yield. People just don't publish it. It's more dramatic if they don't, and it doesn't really apply to where we're at to the people that know what they're doing. You can see the year-to-date increase on the yield is up 14.12%. That's not obviously 14.12% in actual yield. It's just that much of an increase over a year and 5 years. This is why when you look at it, our rates are back to where they were before the big crash in around 2007 and 8. If you look here, I mean, it's up 8.5% above where it was in the 60s, but for most of us, we weren't buying houses then. Anyway, just keep a lookout. This is going to stabilize at some point. Looks like we hit a new plateau for right now, but I'm sure some news will come out in the next few days that'll either send this up or down, or just make people feel more confident in where it is. Um, just don't go crazy today. So look, here's my really strong personal advice, and I'll tell this to anybody. Just like in everything else in life, you make the best decisions for you and your family and your community where you're at and when you're at. Okay. If you sit around and you don't make decisions, you don't go forward. Sometimes the decisions don't end up being the best in the future, but if it's the right time for you to buy a house, if it's the right time for you to pay off those 25% credit cards and car loans if you have bad credit, do it. You can always go back and refinance later. This is not typically a one and done thing for most people. The average person keeps a mortgage. Well, in the past, it's been less than 5 years. So if it makes sense at the time, pull the trigger, whatever the decision is. Okay, just make sure you know what you're doing when you do make that decision, and don't wait around until you have taken enough time to pass a college, you know, a college semester on it. This stuff isn't rocket science, but experts that are out there can help guide you, and hopefully over time you'll come to trust me as one too. A lot of people already have. Take care. Like I said, this is my opinion, but we're in a new normal, and the normal right now is that nothing's really normal. Have a great day and a great weekend.